Market opens, Dow up 100, Nasdaq, nice gain, up 154 after recent huge losses. Michael Lee joins us. All right, Michael, let's go at it. Convince me, please, that this is not a drawn-out, long-lasting bear market.
Hey, Stuart, great question. Well, first, because it's not only you making that argument, there's a lot of people out there making that argument. Almost by definition, that means we're not in one. At no point did we see...
So whenever I say do the opposite, I'm not... Go on.
It's bull markets, and bad things don't happen when people expect them to happen, and they're consensus, and that's because people have already sold or they're positioned against the market. So what's going to push this market down further if we're going to go further and if we're going to go into a bear market, something bad needs to happen. Some sort of, some other coronavirus, some other terrorist attack, some war, some exogenous event is going to have to derail us. The fact of the matter is the economy is like this huge boulder. Once it gets rolling down the hill, it picks up steam. It'll slow down at certain points. It'll increase speed at certain points. I think the Fed is going to try to slow it down a little bit, but until we see some sort of blow off the top or debt bubble, the business cycle is not going to end. And until we're at the top of the business cycle, we are not at the top of the market.
Bank profits, earnings, they've not been that great.
Well, you know what, Stuart, really we've seen interest rates or the yield curve sort of really expand more so in the first few weeks of this year and in December. And a lot of those bank profits, they closed the fiscal year end on December 1st. So a lot of the favorable environment for them happened after their reporting periods. So I think you're going to see some net interest margin expansions. And I do think, as the Fed raises interest rates, the banks can charge more on mortgages and loans while pay you nothing in your checking account. So they're going to make a lot more money in there over the next few months. I think that's reflected in the stock price, but you're not going to see it in the earnings until later this year.
So to wrap it up, do you see stock prices, the Dow, the S&P, and the Nasdaq, all of them across the board, higher by the end of the year than where they are now?
Yeah, absolutely. I think until we can form consensus on what the Fed is going to do, you're going to be a big race to nowhere. And the sell-offs are always going to look more ugly than the bounce backs just by the fact that people panic when the market goes down, and when the market goes up, no one panics. So it's always going to look ugly on the way down, and before you know it, the market's going to bounce back. But for the next 2, 3, 6 months, we're not going to make any major directional moves until we can come to consensus on what interest rates are going to do. And after that, we're off to the races, and typically after the first rate hike, the market increases for the next 3 years. So I think we got at least a few more years to go.
Okay. The perpetual bull. Thanks for joining us, Michael. We always appreciate it. Thank you, sir.
Thanks, sir.